listings are up, but demand for real estate, particularly in our two largest capital cities, namely Sydney and Melbourne, has definitely slowed down. So we have a combination right now as we go into spring of a rise in listings, is what you traditionally get in the spring selling season, but a slowdown in demand.
CoreLogic's data shows capital cities split on house value rises and falls during August. Does your data show the same? And if so, why is there a multi-speed market?
Yes, SQM Research's data is showing a very similar result, with housing price declines recorded in Melbourne over the past 30 days of about 0.48%, and Sydney prices down by about 0.2% over the same period. Why is it happening? Well, there's a range of reasons for it. I think firstly, there's been increased uncertainty about exactly when interest rates are going to be cut, and indeed some concern that perhaps we might actually get another rise. Further to that, I believe that underlying demand for real estate is now slowing due to federal Labor's initiatives to try and slow down the rate of migration. And we're seeing some results out of that through rental vacancy rates rising in areas close to universities. So we think the focus on international students has been essentially working in terms of that policy, but it's also creating a fall in underlying demand for real estate to buy.
That's really interesting. What is your view on whether Melbourne could be leading a downturn in the market? Or is there likely to be a softening but not a fall in values?
I think overall for Melbourne as well as for Sydney, and these are the two cities where we believe that the downturn is going to be most acute. But speaking of acute, we think the magnitude of the downturn is only going to be along the lines of about 1 to 5% annualised declines. We're not expecting a crash by any means or any nature. And the reason why is because we're missing one key ingredient behind a crash, and that is a surplus of properties. As we all know, we've been going through a rental crisis. That rental crisis is not over yet, but that really amounts to a dire shortage of real estate. And so I believe that when you have such a shortage, it's very hard to see a material decline in housing prices unless we go into a deep recession.
State government policies targeting investors have been introduced and are being introduced in Victoria, Queensland and New South Wales. What are you noticing in relation to investors exiting the property market?
We have noticed an outflow of investment activity in the state of Victoria, where property taxes aimed towards investors seem to be the most heaviest compared to, say, Queensland and New South Wales. Whereas states where we're seeing relatively light property taxes on property investors, seeing more activity in that space. For example, the state of Western Australia. Now, correlation doesn't necessarily equal causation, as we all know, but nevertheless, that is what the data is showing.
Is any segment starting to look anything at all like a buyer's market?
I think the Sydney housing market and the Melbourne housing market are definitely tending towards buyers. We're seeing more negotiations by sellers and other property owners as well who are perhaps off the market. They're willing to lower their asking price. So that is indicating that it is turning into a buyer's market, notwithstanding that housing prices in our two largest capital cities are still very expensive, very much over fair market valuation. So to call it a buyer's market when things are still very expensive, that's probably one bridge too far for me. But it is fair to say that, look, it's starting to swing towards buyers.
Just finally, can you offer any hope for first home buyers looking to get into the market?
I think the window over the next 6 months in Sydney and Melbourne will be better for first home buyers. As mentioned, we are in a downturn, a modest to moderate downturn. We believe, though, this downturn is not going to last for that long. We think the window is going to be about 6 months and will likely come to an end once we start having interest rate cuts. So I think between now through to the first quarter of 2025 would be relatively good conditions for first home buyers to at least research the market.
Okay, Louis Christopher, great to speak to you. Thank you.
Thank you.